Gentlemen, thank you for joining us this evening at the Exitim Investor Club. And I'm about to interview Richard Carleton, the CEO of the CSE, the Canadian Securities Exchange. Richard and I had met probably, what is it, 3 years ago?
At least, yeah.
I think in the second trip to Israel. Immediately find a liking to each other. And I've tried to promote the CSE in Israel. We already have at least one Israeli company that I brought to the CSE. Two are pending. You don't even know. I'll be happy to tell you about that offline. Both Procore and Canibal are on the way to list on the CSE. And Richard has done a tremendous job in building the CSE from, I think, a very small stock exchange to where it is today. And, you know, I don't want to talk anymore, but really have Richard introduce yourself. So thank you for joining us. I really appreciate for you taking the time, Richard, and, you know, the microphone is yours.
Well, thank you very much, Ronnie. And as you know, I miss my regular trips to Tel Aviv and to Israel. In a short time, I've had a chance to visit a number of parts of the country, and it's always one of the highlights of my business year when I have an opportunity to meet with you and a number of your colleagues in the Israeli finance and early stage capital community. And as you mentioned before we got on the air, the weather is almost always spectacular, and in particular at this time of the year when we're still struggling between winter and spring in Canada. It was always a good time to get to Israel and enjoy the sunny weather, the beach, the lively cultural scene, and experience the energy of the Israeli entrepreneurial community. It's always a treat. But to get into a bit of background about the Canadian Securities Exchange, as you mentioned, we ourselves are a startup. The organization began life back in 2003 with a mission to provide a better go public experience for early stage public companies. And we're really looking to develop what we refer to as public venture capital. So to provide an alternative for companies that might otherwise look for venture capital, private equity type funding. And we think that it's really important because it democratizes the capital markets. One of the shortcomings of the PE and VC model is that participation in the growth of investee companies is restricted to the very wealthy in North America. And these are the times when these companies are growing the fastest and building wealth for their shareholders. And we'd like to provide an opportunity for the companies to offer that ability to public investors to participate in that growth. So taking the companies public at a much earlier stage than you would see traditionally in the United States and Israel and other developed capital markets around the world. So as you mentioned, it can be a challenge building a stock exchange from scratch. Getting the first few listings in the door is an extremely difficult exercise, especially when we're competing with a well-entrenched incumbent. And it took a while, but after about 10 years of really hard work, keeping our nose to the wheel and otherwise doing a tremendous amount of foundational work, the organization really began to take off. And so we're in a position today where we have more than 650 listings on the exchange. Companies over the last 12 months have raised more than 6 billion Canadian dollars. We've been identified and recognized around the world as a leader in the cannabis space, both for recreational purposes and medical purposes. And that's, of course, just one of the reasons why we've been interested in the Israeli market as we have. But also a very important segment of the market is in the mining space, technology, e-gaming, blockchain. We're even starting to see some Bitcoin-related investment opportunities.
Again.
So it's been, again, yes, after a 2 or 3 year hiatus. And so we think that, again, we're well positioned to help companies that are coming into the public markets as an alternative to venture capital and private equity finance, and enable them to, as I say, help public shareholders enjoy the benefits of the rapid growth of many of these companies as they develop to maturity.
Richard, we're past COVID now, or well, Canada is not quite yet. It will be. It will be. Sorry for that.
Okay, well, I keep hoping. Yes.
Okay. What is the investor sentiment? What is actually happening now in Canadian capital markets and the CSE post-COVID? How do you see the COVID crisis evolving on the stock market?
Well, it's been a fascinating ride over the last 13 months. There was obviously a tremendous amount of uncertainty in beginning in March 2020, and obviously global equity markets suffered a very quick meltdown in late March last year, followed by the fastest recovery from a meltdown in the probably in the history of Western capital markets. And then the remainder of the year was extremely robust. Any way you look at it, whether it was new companies coming in, the amount of money that they were raising, participation rates, particularly from the retail side, number of new accounts being opened in Canada and the United States from the retail side. And as we mentioned off air, also an important generational shift, so that for the first time we saw people in the 20 to 35 age bracket in North America opening brokerage accounts and participating actively in the market. And by and large, these people have a very high risk tolerance. They're not buying the banks, the utility companies, certainly not buying the oil companies or other issuers that have poor ESG scores. They're looking to invest in what they know. So whether that's esports, cannabis, technology of different kinds. We go back to the blockchain, the Bitcoin themes. They're very much supportive of the early stage companies that are coming into the markets at record rates over the last 12 months. And I think the sentiment is, in addition to high risk tolerance, what we are seeing is an expectation really throughout all segments of the market that there will be a considerable rebound in economic activity as we come out of COVID. And there is a lot of money on the sidelines. One of the unique characteristics of the pandemic has been, and I'm sure you've seen this in Israel as well, there are various segments of society which of course have been tremendously hard hit. Folks in the service industry, whether it's entrepreneurs or people employed, in a number of industries which were designated as, which had to be closed in response to various lockdown orders and so on. But by the same token, the folks who continued to work from home found costs reduced, disposable incomes rose, and with the supports that the various governments were putting in place, we've actually seen an economic crisis that has increased the income levels for the population in general. And the amount of free capital in the system that's available to both invest in the early stage markets as well as invest in the anticipation of improving growth and the economy in general in the coming few months, I think there's a very, very bullish sentiment in the markets as we speak.
Great. Could you tell us a little bit about the Canadian retail investor? What are his or hers investment preferences, and why does he invest in small caps?
Well, I think it is fair to say, Ronnie, I may get in trouble by that the investing profile for women does tend to be more conservative than that of male investors.
Woman, watch it. She's driving my success.
Yes, as I realize that there's absolutely no way I could win, this discussion. But the notion is that of course the core of your portfolio is not going to be in early stage companies where there is a significant risk. But of course, where there is significant risk, the potential for returns obviously is there as well. And Canada, I think, is really one of the two markets in the world where you see a substantial risk appetite and history of supporting risk capital in the public markets. Australia is the other way. And what we have in common is a history of supporting the mining industry, basically, which is, as you can guess, it's hit or miss. It's binary. The outcomes are binary. Either you find a partial deposit or you get nothing. And but the risk profile attached is, or at least the risk premium attached is such that if you support a company that in fact finds a commercial grade deposit and ultimately decides to either raise the finance to put the project into production, or more likely does some kind of arrangement with a global scale producer, then you see the economic rewards. Significant returns, whether it's 500 times, 800 times, whatever. So there is a chance, an opportunity to do your due diligence, to understand the geology, to understand the background of the management teams, to look at the share structure, the capital structure of the company, and identify those projects that you would like to participate in. And as I said, I mean, this is one of these things where everybody can invest. These are public companies. It's not a private equity opportunity that's locked away inside of the asset management business of a global investment bank. This is something that everybody can do. And of course, when you think about the news and analytic tools that are available to the individual investor now compared to even 5 or 10 years ago, the playing field is actually a lot more level than it has been historically. There's a lot of data out there for people that are prepared to do the time and discipline to do the due diligence and to do the study. And so, as I say, it's been a very popular undertaking for many years. And of course, entrepreneurs and their advisors, such as you, Ronnie, have discovered that that model is applicable to lots of other areas of the of startup business. Again, whether it's pharma, life sciences, there are lots of different parts of the entrepreneurial landscape where the outcome may be binary, but the rewards can be tremendous if the company succeeds.
I'm always struggling to explain people in Israel the concept of the RTO in Canada. First of all, the word in Hebrew, shell, is sheled, which means skeleton. So immediately you get a negative. Can you just walk us briefly at why RTOs are so popular in Canada and the process assigned to an RTO?
Well, basically, there are 3 ways of going public in Canada. There is the traditional IPO, in which a company files a prospectus with the regulators, hires a dealer or a consortium of dealers. They sign an opinion attesting to the veracity of the information provided in the prospectus, and then they do a public offering of securities, and the company lists on the exchange. The cousin of the IPO is the non-offering prospectus, and that's where you have a company who is usually quite mature, has done an awful lot of private placements and third-party investment, so that they have enough of a public float and public shareholders that they, and also the resources, that they don't need to do a distribution of securities to raise money. And so they can go basically straight onto the exchange through something called the non-offering prospectus, which is filed and approved by the securities authorities. The third way, and it's the most popular way in the junior capital markets, as you mentioned, is the reverse takeover. It's also known in the United States as a reverse merger, which is probably the least, I guess, challenging way of describing it. And that's a situation where you have a company, and in Canada, it's often a mining company, and it's one of the ones who did not find a commercial grade deposit in the property that they were looking at. And so the company is basically, they're kind of like, as an active business, they're defunct. There's no point, or they would not be able to raise further funds to further explore the project because they drilled the holes and there's just not enough of what they were looking for there, not commercially feasible. And so what the principals of that company will do instead is they will keep the company alive as a company listed on the exchange, and they will look for another project, another company to vend into or to actually acquire the public company. So under the terms of the deal, you will typically raise some money, whether it's typically by way of private placement, and have the private company take over the publicly listed company, and in doing, they acquire basically the listing. And so what that means is, the benefit for the private company is, one, it tends to be a little faster than going through the whole IPO process. The capital can be considerably less expensive because you're not having to go through a hire dealer, go through a due diligence process with them, and otherwise support the expenses of doing a broad public distribution. And the other thing is that you're working with the exchange on the disclosure, not the Securities Commission. So we have a staff, as do the other exchanges in Canada, that will work with the company and their lawyers and advisors to ensure that prospectus level disclosure is provided in what's called the listing statement, which is basically a prospectus type document, which they file with us before the resulting reverse takeover is approved for listing on the exchange. And as I say, the transaction concludes and the successor company takes over, and it will rename, of course, the company, new QSIT, new stock, but they have the existing shareholders of the old company, and that way they've achieved that broad distribution of their securities that would otherwise have had to have been done through an IPO. So I got a little technical there, but the short answer is it's probably a little faster, and it's certainly cheaper than doing the traditional IPO. And that's why it's particularly apt for smaller companies who may not be in a position to absorb those increased expenses or need to, in fact, have as broad a distribution of securities as a larger, more mature company, perhaps.
How do you think Israeli technology is perceived in Canada? What is the current investment sentiment to Israeli technology?
Well, that's obviously one of the things that you know, why Israel is such a regular stopping point for folks in the capital markets on a global scale. Israeli technology is well regarded around the world for its innovation, and as well as the energy of the entrepreneurial class in Israel to build companies, get them off the ground, relentlessly drive both the company, the employees, the development of the product, and so on. And as a result, as I say, Israeli entrepreneurship has a tremendous reputation around the world. And as I say, from an innovation perspective, Israel is obviously one of the leading focal points in the world. There's no doubt about it.
What should an Israeli company that's seeking to list on the CSE, what should it do in terms of valuations? There's always the issue of builder shares, IR technology. Do you have sort of a formula for an Israeli company to succeed on the CSE?
Well, I don't know if I've distilled it down to a formula yet, but I think there are a few key points that you've raised that bear mention. Obviously, one of the big issues for all international companies listing in Canada is to make sure that there is a sizable local float in Canada. And because if there isn't, the stock can be very difficult to trade. Especially for if the company is coming from places, you know, whether it's Asia or Europe or Israel, there's very little overlap on the trading day. In fact, with Asia, there's none. And so if you're expecting your investors to get up at 3 in the morning to trade your stock, it's a bit challenging. So to build that float, to make sure that you have engaged and interested investors in the Canadian market is a key thing. And that speaks really to the RTO as the going public means, because you're requiring basically Canadian resident shareholders as your core public shareholders as a result of that process. So that's one of the things. Is again, you need to make sure it's great to raise capital, in Israel or to your home market. But as I say, it's critical that you figure out as well how those people can trade from those positions in Canada as well. There needs to be a well-defined path so that there are international brokers who provide access to the Canadian Securities Exchange. So you need to make sure that your key backers have access to those brokers. There's another component which, as you've heard us speak many times of the advantages of being a Canadian reporting issuer, is that there's effectively an open border between Canada and the United States in the securities market. The stocks are fully fungible as between Canada and the US clearing and settlement organizations and brokerage accounts. And there are also provisions in US securities legislation that allow Canadian public companies to raise all sorts of capital in the US without having to either A, file a prospectus, or B, register as a reporting issuer in the United States, which is a very expensive process and exposes your board of directors to litigation on almost a daily basis. So you get the best of both worlds in many respects with a Canadian public listing. You are able to tap not just the public capital markets and appetite for Israeli companies in Canada, but you're also able to access the United States capital market as well. And what's more, companies don't have to immediately list on NASDAQ or the New York Stock Exchange and spend hundreds of thousands, if not millions of dollars in listings fees and advisor fees and so on. Instead, they can trade over the counter in the United States for negligible cost. And so they're able to provide US dollar denominated liquidity to US investors who may have purchased private placement stock, for example, in the company. And the other thing is, if you can start to build a shareholder base and a following in the US, again, without having to take the big step, bridge too far for many companies when you're at the 40 to 50 or even $100 million market capitalization, of actually thinking about a listing on the New York Stock Exchange or NASDAQ.
Okay. As you know, on most offerings that I did in Canada, I always emphasize bringing also Israeli investors in a pre-RTO or in the RTO round. Now we formed a few months ago exit team on a model that we're raising in Israel, I'd say up to $2 million from 35 non-credited investors on a pre-RTO model, so to bring money before the listing. And this is pretty much the model that we formed. What is your view on that? Do you think it's good? Where do you think this takes us?
Well, I think, listen, Ronnie, you and I have been at this for a while, and one of the big to-dos to have a successful public company launch is to make sure that the company has sufficient working capital and sufficient runway while it's a private company, and so that it is able to, it has the resources on hand to begin to show the growth trajectory. And as you and I have discussed many times, it's important that the companies are not just at the idea stage, that they've developed products and that they've got they're forming sales channels and that they're in customer trials, or that there's actual data and results and milestones that the companies have hit. So it's critically important that the companies, while they're at the private stage, have sufficient resource to be able to demonstrate as they move to the public capital markets that they are at that stage. So that is critically important, as you say. Now, one of the huge benefits, of course, for those investors is that unlike putting money into a private equity fund, where it may be some years before you have the promised liquidity event for the successful companies, with a Canadian public listing, the early stage investors are able to have that liquidity event significantly earlier. And so they are able to both have that the valuation validated by the public market, which of course is the ultimate truth tell, and they're able to have the liquidity to either reduce or increase position in the company as it matures in the public capital market. So that's obviously one of the enormous advantages to the companies in raising that capital, because they have that path to liquidity for the investors in a considerably shorter period of time than you would if you are marketing a public equity or a private equity fund, as an example.
Okay, so I think you've pretty much answered all my questions. I really thank you for your time and joining us this evening. And we'll open this to Q&As.